Hello, good morning. It's Monday the 21st. I'm FX Blue and it's another blowy old day for the market brief. Eunice kept me off the air wheel, but Franklin can go away. So the MPC faced a difficult decision at their next meeting. Inflation is raging out of control, around 2.5 times higher than the government target, and consumers are facing higher costs coming from energy price increases, and also don't forget the significant increase to national insurance contributions coming soon too. That's all part of how Sunak plans to recoup some of the extraordinary pandemic expenditure. So, do you think we'll see a third consecutive rate hike? Or perhaps will the Doves convince the vote that a wait-and-see approach would be more sensible? Please let me know your thoughts in the comments below. I'd love to hear from you on that one. Boris has been on. He's making every effort to move on from Partygate. That is, of course, despite being hounded by the press at every interview, asking whether or not he plans to step down if he is found to have broken the law. Plenty left on that one. But in a gamble or another calculated risk, depending on your politics, he plans to remove COVID legislation. That means no more need to self-isolate following a positive test, and he wants life to return to as close to normal as possible. Back to normal again? Oh, that sounds like a good excuse for a party. Friday's retail sales data was far stronger than forecast, and that provided a boost for the pound. A rise of 1.9% was well above the forecast of 1%. So in the market, sterling gained a little more support against the dollar, and we saw a high of 136.45 last week. We start the new week from around 136.20 against the dollar and about 119.85 against the euro. Plenty of the US focus is on Russia and Ukraine at the moment. They continue to try and bring that situation under better control. Apparently Biden has agreed in principle to attend a summit meeting with Putin. This was after Putin and French President Macron had a little call where it was agreed that they would continue to search for a peaceful settlement. Now, call me cynical if you will, but does anyone else feel that Putin has a very clear playbook planned out for Ukraine? It strikes me that the West is rather scrabbling around trying to work out what they might be able to do to defuse the situation, while that wily old bear boxer is a little more cool, calm and collected. It's all very disconcerting if you ask me. But good luck to them around the negotiating table. Back stateside, the Fed meetings confirm that we can expect rates to rise quicker than in the last cycle back in 2015. That means that starting with a 0.5% rate hike looks a lot more likely. Powell will provide an update next week when he testifies before Congress for his semi-annual report on the economic outlook. Expect warnings as the Fed still faces wage inflation pressure, and that could push core inflation higher regardless of any central bank action. Chasing inflation by pressing harder on the brakes always carries the underlying risk of tipping the economy into a recession. So it's a fine balance to strike, but that's why they pay him the big bucks. In the market, the dollar index is still receiving support from global tensions around Ukraine. It remains in a fairly tight range around the 96 mark. Euro dollar opens this morning around 113.65. So there we go. We got through it without too much of a shambles. Join me again tomorrow. All the best.
If you do not have a clue, then just tweet through and ask FX Blue.